Hi and welcome to the Trading Bell Show. We are right here at KCB headquarters, Kencom, to speak to the Group Chief Executive, Paul Russo. They released their results, 37.5 billion profit after tax. And Paul Russo says they have gotten a hit a bit, but they have more to come in form of their strategy. But first, we'll discuss those conversations immediately after checking out his profile. Welcome.
Paul Russo is the Group Chief Executive Officer of KCB Group PLC. He's a member of the boards of KCB Group PLC, KCB Bank Kenya, National Bank of Kenya, KCB Investment Bank, KCB Foundation, Bank Rwanda PLC, and Trust Merchant Bank. He is also a member of the Kenya Bankers Association Governing Council, the banking industry lobby. He is responsible for overseeing the transformation of KCB Group into the undisputed leader in the financial services sector and a customer-focused financial powerhouse. He has extensive experience in banking, strategy, operational and people management. Previously, Paul served as the Regional Business Director, KCB Group PLC and the MD NPK. He has close to 25 years of work experience spanning executive and key roles including Group HR Director, KCB. He has served in other big corporates such as Barclays, PwC, KREP Bank, EABL and Unga Holdings.
Paul Russo, welcome to the show.
Thank you so much.
Congratulations on the numbers that you released yesterday, but I wanted to start this conversation with what has been on the headlines, definitely. And you made a decision to accept the binding offer from Access Group to take over NPK, which have made quite some headlines as we saw yesterday and even today. Could you share some more factors about what led to this decision and the optimism you have for the future of NPK?
Yeah, so I think it's important to go back to 2019 when we took over NPK.
Yes.
Originally the strategy was to take and integrate with KCB Kenya. Typically I said to people that that's not a straightforward process because you've got a huge entity, you have to clean up and reset that entity.
Yeah.
In the process, we continually reviewed and were running that particular setup.
Yeah.
Went to the step where we deployed T24 terminals to bring them onto the same core banking platform.
Yeah.
But as you realize, 2023, and we recapitalized it to about 14 billion.
Yes.
For both compliance and business performance.
Mm-hmm.
But the famous Basel Criticals case versus NPK took the institution back to non-compliance. As I said yesterday, you're looking at an additional 5 billion to make NPK compliant and maybe another 3 billion to then support growth.
Okay.
In the process of making a call, you just don't make a decision on funding for capital.
Mm-hmm.
We chose, the group through the group board to make a full evaluation and see what options that we had.
Yeah.
And it's at that point that we made a decision that the offer from Access made a lot of sense for.
Okay, fair enough. Still on the same thing, that acquisition has seen both great progress and challenges, as you said yesterday. And I feel, I don't know whether this is a pain point for you because you felt very passionate when you were taking up this NPK, listening to you then. It must have felt like, the releasing a child that you have been growing, but I don't know how that feels for you. But I wanted to ask you, could you elaborate on the significant legacy claims that have impacted the gains achieved and what strategies were in place to mitigate such challenges moving forward?
Yeah, it's tough. Like I said yesterday, I love NPK. I've run NPK for 2 years. I know the value of NPK, both from a people perspective and a performance perspective.
Yeah.
So yes, it's not the easiest of the messages to deliver.
Yeah.
But we've worked on this for the last 6 months.
Okay.
And I said the fact that someone leaked it in the night before the decisioning is actually good work because we've run it for 6. This decisioning process has been there for 6 months.
Okay.
Since September, the last time I spoke to you.
Okay.
The legacy cases, look, out of that, Basel Criticals is 2.5 billion. It's a 30 plus years case.
Okay.
Right?
Yes.
I'm on record saying we've taken advice in the past from top lawyers and top law firms.
Yeah.
Worst case scenario that you'd look at that case in every advice that we got was 220 million.
Okay.
And you get times 10.
Okay.
There is nothing that will prepare you for that outcome.
That's true. That's true.
Yeah.
Okay. Fair enough. And let's get to a bit of the numbers. And 37.5 billion profit after tax. You noted that this is quite a huge mark. But of course, the other headline is also about the dividend that you chose to keep and reinvest. And I wanted to just ask you what really led to this and what informed this, and what message do you have for the shareholders who probably were hoping to get something from you? Yeah.
That 37 is far below our ambition.
Okay.
Far below.
Okay.
If you look at those numbers, we took tough decisions to downgrade 56 billion.
Yeah.
Portfolio of 56 billion. Those numbers, we are carrying round about 14 billion or thereabout of FX impact because of the depreciation of the currencies on the loan book in the ECL model.
Yeah.
It's not a joke, but it might sound like a joke. If you had pushed the reporting period to 31st January, that number would have been up by 10 billion.
You're right. Wow, 10 billion.
So you'd be reporting down about 47.
47 billion, yeah. Okay, quite significant.
Right?
Yes.
So you don't control the market, but you must be prudent about how you account. So
yeah.
we believe that was below our ambition. But on the different front, and it's true, this is the first time KCB has not paid dividends in the last 21 years.
Yeah.
You've got an entity called KCB Kenya, which is your machine that performs, that generates that value for dividends.
Yeah.
The prior year, it paid dividends for the acquisition of TMB. Right?
Yeah.
That, with the downgrades that we are talking about, has an impact on capital.
Yeah.
You can see the capital level in up to September was thin for KCB Kenya.
Yes.
But it is your entity that generates value for the dividends. So if you pay dividends and constrain the ability for it to generate for you in 2024 and going forward, then you'll be doing a zero-sum game.
Okay.
So we are pushing to make sure that those decisions we took in 2023 deliver better dividends for 2024 for our investors.
Okay. And fair enough, because you've spoken about your capital stand, and I also noticed that in the same year there was an acceptance of some significant funding, especially for the Kenyan entity. You talked about EIB and Propaco, which is quite ambitious. In fact, I wanted you to just elaborate. What are the insights, or what specific growth initiatives are you expecting to really pump into this funding?
If you look at 2023, KCB Kenya grew 23% on top line.
Okay.
Credit and lending grew 23%.
Yes.
You have to support and fund that growth. That's why I speak on a light note and say it's a machine. It fires from all cylinders, right? So you've got to say, how do you fund that growth?
Yeah.
Now, you'll obviously go for cheaper liquidity and see how you can get that. But you always have to have lines available for you to be able to utilize. Largely, that is actually towards SME. And you must have seen our numbers for women-led enterprises.
Quite high.
In terms of supporting those businesses.
115 billion?
You have to fund those lines.
Absolutely.
Yeah.
Absolutely.
So we've got approvals from both sides. The conversation is draw down, and when you draw down, and I mean, you don't just take money to keep. So you must have opportunities to deploy and deploy optimally.
Okay. Let's talk some positives. I noticed that you had some notable growth on your digital services, which means that Kenyans are embracing your digital ways of transactions. Mobile lending showing 73% increase, and internet banking as well 47%, which is quite commendable in terms of the numbers. However, I also noticed that you had your mobile services decrease. And I was wondering, what are these? What are the factors contributing to this particular trend and adjustments that you've seen?
I think our explanation is only one. Remember, up to that point, it was free because of the call.
Okay.
And charges came in. So there was migration to use it when it was free. No wonder you're seeing ATMs for the first time are up.
Yes.
If you
People
notice.
back to the ATMs.
So it explains. Everybody's trying to save a shilling.
Yeah. Okay. Thank you. Fair enough. Now, there's another interesting fact that I saw, and it's about your provisions for the NPLs. And I just wanted to ask you, looking at your NPLs and the percentages, one would be a bit concerned, thinking, are you worried about it, looking at it? And could you shed some color on it, looking at the percentages?
I'm not worried. Is it a concern? Yes.
Okay.
Right? Because if I was worried, then I shouldn't be having this role, right? The stock is massive.
Yeah.
The NPL stock is massive.
73,
That's why we're not
70.3%.
focusing on NPL percentage.
Okay.
If you see our results and the reporting, if we focused on percentage, we've moved from 22 to 17.
Yes.
Right? But the stock is an issue.
Okay.
So, and we've put in plans, as the CFO articulated yesterday, to reduce that stock. So our focus will be on the stock. By the stroke of the exchange rate, as I told you, 14 billion of that is off.
Yeah.
From that stock.
Yeah.
The downgrade of 56 billion last year, if you take actions to revive those, it should be. I think for me, knowing that stock, which is what we did in 2023, is the great news.
Yeah.
You pumped it up, but you know it. So you have two tasks now.
Okay.
Manage migration so that there's less flow into that, and then reduce the stock. Those are the two priorities now.
Okay.
I think investors were always worried, at least when I took the role, and said, Paul, we don't see the end of the increase. So I needed to bring that close.
Okay.
And that means you shock, isn't it?
Yeah.
How do you downgrade 56 billion? You gotta do it, because if you're gonna do bit by bit, you're losing confidence.
You're right.
Right.
Okay.
So 2023 for us is a major milestone of just getting that stock closer to what we think is a max. Yeah. And I think then that lightens the organization to run, to perform.
Okay. Still on the same, I'm curious about the provisions you had to really provide for this, and did it hit on your books as well because of that?
Yeah, and that's what, in effect, that's why I'm saying 37 is very low for us. And if you look at the numbers, if you strip out that, the business would have been almost 12-13% above year on year. The reality is, you've got a window and you must take that window.
Okay. Fair enough on that. And before I talk about your new strategies now that you've moved to the new one, I wanted to talk about the growth we saw, especially in your core capital and risk-weighted assets, and dividends being posted as well. We've spoken about that. So I wanted to know, what are you seeing, especially when you foresee the discussions that will be coming up? I'm very curious about that, because there was a lot of questions that people sent me saying, let us know, what do we expect to find out in the AGM, or even before then, or even before the year ends for 2024? Do we expect some dividends to come by?
The good thing about the AGM is it comes after Q1 results.
So you'll have some news.
That's a good news.
Okay.
There is, barring any major catastrophe, I don't see. I think we should be able to get to some superb performance in 2024. And that's just what I can say today. But Q1 is very important.
Okay.
And remember, Q1 is 10 days away.
Yes, 10 days away.
Right? 10 days away. Because how do you, if I was, I've got a few shares, but if I go to the AGM and I don't see a turnaround in 2024, there's a problem.
Okay.
Isn't it?
Yeah, that's true. That's true.
Yeah. So I'm glad it's coming after we will have released quarter one results.
Okay, still on the numbers, let's talk about your net interest income as well. I noticed you had you experienced a decline on it due to the high cost of funds, as you said, in a high interest rate environment, which has not been just an issue on your end only. I think it's an industry thing as well. So with the approval of risk-based pricing, which I was thinking would have really helped to cushion this, how effective has the model really worked? Because I thought probably with the risk-based model, you being one of the pioneers of this, it would have probably brought in some cushion.
It did, but remember it came in the second half.
Okay.
Right after we'd released the half-year results. So it must have been July, thereabout. So you wouldn't have seen the full effect.
Okay.
But the interest rates went up. And what you're paying for deposits today, my friend,
yes,
16 or thereabout percent. It means you must lend at how much to make more money.
Quite enough.
And then the other, I've always been on record saying, it's just how many people can you charge 20%, 21%?
Not many.
Right? Because people look and say, oh, so you have this loan book, therefore now you start charging 15%, this is how we expect you to increase your interest income. It doesn't work like that.
It doesn't.
You know, customers are individuals, particularly corporate customers.
Yeah.
There is a bigger relationship than that just charging interest. So it did help, but the actions of monetary policy, you know, also made and decisions by large depositors to demand higher rates, as well as the constraint on liquidity across the market.
Okay.
Did play out.
All right. One of the key positives is how your revenues increased by the 27%. I saw the number and I was quite interested. But one of the key factors that I was really interested to see is from the government securities, which when I talked to other sectors, I mean, I don't want to call them your peers, but people in the same industry as well, some of them shied away from government securities, but you sounded or seemed bullish on it, and you made quite a chunk on it on your books. So I wanted to find out from you, how was it on your end? Were you not a little bit cautious when you looked at the interest rates that were really quite attractive at some point?
I think it is a risk-reward at the end of the day.
Okay.
Everybody played cautious because of the Eurobond cloud.
Yes, yes.
Right?
Yeah.
Now the cloud is gone. I'm sure a few people would have said, I wish I went in. Right?
Yeah.
You saw the oversubscription of the infrastructure bond.
Yeah.
Government went for 70, got to 40. Right?
Yeah.
So, I mean, the team took a bold decision. I think it must have been the bond of 18% or thereabout. Effective is 24.
Yeah.
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 That's why the treasury guys are brilliant and make those calls.
Fair enough. Your strategy, I heard you pronounce it very well, transforming today together, which definitely is a catch. And I wanted you to just speak to it because you've just ended this. And I felt, maybe correct me if I'm wrong, I felt like you decided to take the bull by the horns in 2023, especially on your Kenyan chapter. You didn't want to cross over with any dirt on you. It feels like it's a clean slate with new strategy and all that. Am I right? And what do we expect on this?
You got it right.
Okay.
Cut the pen, deliver the news, start your 2024-2026 strategy with clarity of mind.
Okay.
Yeah, you have your bigger business.
Yes.
You want to succeed in that period, lighten it up.
Yeah.
To take the tough call. You know, it's a year you're not paying dividends. Make the tough call, my friend.
Tough call, really. Yeah. That's true.
The 2024-2026 strategy, transforming today together.
Yeah.
It's yes, transformation is really anew.
Yeah.
Right?
Yeah.
It's defining what's the new phase for KCB. Right? Today is about timing. It's not tomorrow. It's a sense of urgency.
Okay.
Speed of execution. Today. You want to run transformation, and it's not transforming. It's every corner you are in, wherever you are as a staff, you must transform that space today.
Yeah.
And it's together. It is not the board. It is not management. It's every single person.
Yeah.
Across the region.
Yeah.
Coming together to transform.
Wow. So as we come to an end of this conversation, I wanted to ask you this. I noticed that Tanzania, one of your regional or subsidiaries, 94% year-on-year change. And I thought, wow, you must have cracked this up, because I know of some people who are still wondering how to navigate that market. I wanted to understand from your end, what are the strategies that have contributed to this success, and what are you seeing in the offing? At such a percentage, you must be happy.
We are, but it's a result of hard work.
Yeah.
Right?
Yeah.
If you look at all our subs, the hard work started in 2018, 2019. Mm-hmm. Right?
Yeah.
At that time, if you check the contribution of our subsidiaries, it was 2 billion. 2
billion.
PAT. Today is 21.
Wow.
It's 2019. Right?
Yeah.
It's more of what we are doing in Kenya today.
Yes.
We took hard decisions on subs.
Yeah.
Whether it's governance, leadership,
yes,
products and value proposition, and customer experience.
Wow.
Yeah? So it's not by accident. Right? It's not even by accident for Kenya that the MD, for Tanzania, that the MD of Tanzania is now a group regional business director. Right?
Yeah.
But look at Uganda, who are in losses.
Yes.
Right? Look at where it is today. It's deliberate action on those 4 or 5 or so areas that's delivering results. If you look at those numbers, if subs did not perform, the overall group performance would have been chaos. Maybe would have declared a profit warning, right? Okay. But it also now demonstrates that KCB made the right decision to invest in other markets.
Yeah.
Because when one market is down, which was Kenya, the other markets were up.
Right. And of course, talking about regional expansion, so Ethiopia is also in the offing.
We have our eye there. We know what it looks like. We will continue to evaluate. Yeah.
All right, I want to end the conversation by asking you to give the last word of assurance to especially the shareholders and your customers. What's your last word on this?
I think I'll echo the words of the group chairman. Yes. We've taken strategic decisions and strategic calls. We've made the right levels of investments. Some tough decisions that we've made, we don't take for granted the decision, for example, on dividends. But the organization is in very good shape. We've got an amazing team of management that leads across the region, and a very solid outlook for 2024.
Okay. Thank you so much for your time, Paul.
Much appreciated. Thank you. Thank you.
There you have it. Paul Russo, very optimistic, saying yes, they had to take a hard hit this time around, but wait for what is coming. Thank you so much for your time. I live in Nairobi markets.